we're going to talk about all things website investing, COVID-19, since that is something that everybody in the world is experiencing right now. But welcome, guys. It's a pleasure to have you.
Thanks for having us on, man. Appreciate it. Love the COVID talk. We're going to be real positive and cheery today.
Yeah.
Yeah.
Well, it's funny that we have like three guys that always work from home on talking about COVID-19 and work from home. So like, we're pretty used to it, right?
Yeah. Another day, another dollar.
Yeah. So we'll be able to talk about what some people that aren't used to working at home, like kind of maybe some tips and things like that. And who knows, maybe working from home will become a new norm for a lot of people. So definitely we'll see some positives come out of this. But first and foremost, I think it's appropriate time to mention that Empire Flippers actually acquired a minority stake in Money Nomad. So I'm really excited to be part of your guys' family, and I look forward to helping people with their online investing journey with my past experiences and my future experiences too. So thank you.
No problem, man. We're really excited about this program. We started this kind of a passive private investment program where we look for companies that are parallel to ours, that are, have aligned interests. And it was great starting with you as kind of a tester because we know you, we like you, and it makes it a lot easier for us and for you to kind of join the family. Obviously, with everything that's going on right now, that's sort of on hold. I think we're going to bring it back at a later date. But it's great to kind of get the ball started with you to kind of like test it out and see how it goes.
Yeah, I'm really excited. I have people reach out to me all the time that are just getting started or on their fourth acquisition, but just want like different insight and things. So it's gonna be a really good relationship.
Yeah, I'm super excited about it too, and it's unfortunate that this happened in the kind of economic times that it has happened, because we did want to roll it out to more businesses, but I'm sure we'll be back at it soon.
Got to roll with the punches, right?
Yeah, exactly.
So speaking of that, since we were just talking about Money Nomad, I wanted to share first what I've been seeing on Money Nomad with terms to traffic and like income in the last couple of weeks. So for those of you that don't know, Money Nomad is a site that helps people basically earn income online, whether that's through blogging, if you just want to work from a computer and be a blogger, or if you want to buy and sell websites, or if you want to sell on Amazon. So that's the type of content that Money Nomad has. And it, over the last like couple weeks, things have the working from home has kind of become the norm. But the 2 weeks prior, people didn't know what was going on. Their real jobs were all kind of turned upside down. And so I saw the traffic of Money Nomad going down. It was down like 30%. And the income, of course, was down too. I just think people weren't in the mindset of trying to come up with additional income streams and like researching that. They were just so focused on, trying to figure out what was going on with their work. But now that everything's kind of become somewhat normal, if we can call it that, the working from home, traffic's starting to go back up, and income's actually now greater than what it was even before all this ever happened.
Yeah, I hate to hear you say that. You said now that we're back to normal, and I cringed because I'm like, dude, if this is normal, I'm not happy. But like, I think you're right though. I think this is a new normal that we're gonna have to deal with, and we just don't know for how long, right? I know that on the one hand, we're trying to get us back to work and trying to get everyone kind of back at it in a few weeks, but scientists and doctors are saying, look, that's totally unfeasible. And we just don't know which way it's going to go. I think, at least I can tell you personally, I'm settling in for the long haul, right? That we're going to, that the new normal is going to be a mixture of, self-quarantine, social distancing, and that we're not going back to the way it was for quite a while. That's my take.
Yeah, what do you think, Joe?
I mean, I disagree slightly. I think that you can't lock up the world economy for 6 months. It's just not really a thing to do. I do understand, though, being a good citizen and doing the appropriate thing, flattening the curve, all the mathematics behind it. I've read a lot of articles about that, and I think that it's important that we do that for the short term. I don't know if we'll be back to work by Easter. I think that's maybe a little aggressive. But
fill those churches, Joe. Gotta fill those churches.
Here in the Philippines, we've been under lockdown a little bit longer than everybody else, but also, here in the Philippines, society is not as well off as America, and I think that some of those poor folks will probably need to get back to work a lot sooner than everybody else.
Yeah, it's good. I hope that it's sooner rather than later, of course. So yeah, like it's really like the concerning thing is no one really knows what's going to happen, right? It's not like we've been through this before. So I guess, like Justin said, buckling down and thinking that you're in for the long haul might be a good approach, because then if we come out sooner than that, at least you're prepared, right?
I think that's a little bit easier for us to say, though, right?
Because that's Joe's point's right. So let me back up that up, Joe. Like, you're totally right in that it's a luxury Americans can afford, and I say that wincingly because I know that there are Americans that are absolutely struggling, and a shutdown will have them struggle. But with bailout checks and family support, they might be able to get by. But there are people in Vietnam and the Philippines where, if the fire were raging in those countries as badly as is in the US, and they, continued with a full lockdown, Joe's right. I mean, there's people that are getting a check not so they can buy the next iPhone, but they can barely afford to eat. Like, if they don't get money in the next couple of days, they don't eat for the next couple of days.
Yeah. And then, in these Southeast Asian countries, social distancing is not a reality. I mean, you're talking about here in Manila, where 15 to 20 people could live in the equivalent of a 1-bedroom apartment. So there's no social distancing that they can do, and actually keeping them at home is even worse. So I don't know, we should probably keep it with online business, not get into politics too much. Sure. But it is interesting to see what will happen here in the next week to 2 weeks, especially in the Philippines, where we've already kind of been under these strict quarantine measures, plus very strict curfew measures as well, for more than 2 weeks now. So yeah, well, let's see.
So, want to give some people real quick, some shout. Amelia's here. Hi, Amelia. I got Jackie Bolin over there, Manuel Kaiser, JK. We're going to get to all of your questions. We're going to cover these as we kind of go along too, just to let you guys know.
Let's jump into the FBA question, since we're kind of on this topic of like uncertainty and like kind of what's happening. So there's two things, right? There's the FBA, the sellers, right, which we can talk about. And then I also saw a screenshot today that the India Associates program, they're asking people not to send traffic via the India Associates program.
Yeah. So I'll tell you that. So let's start with Amazon FBA, and we'll get to Associates. But Amazon FBA, it was a bit of a shock across everybody when they temporarily said, look, you can't put any new products in. We're shutting it down for essential items. Right. And so that was shocking to people, going, oh my God, that's bad. I think that would be terribly devastating if they continue to extend that deadline. It gets extended out, and that would be really bad for FBA. If it's a temporary shutdown of a few weeks so Amazon can hire the new people they need and make sure essentials are going out to the people that need it, I think it's a slight road bump in the kind of continued path. That my guess is that's the case. My guess is it's a temporary road speed bump, while Amazon kind of gets their shit together and is able to get essentials out to everyone that needs it.
Yeah, and I think it's really important that people clearly read and understand these notices when they come out, whether that's from Amazon or from anyone else. It's very, very important, because I've seen people and I've made this mistake myself, misreading things. So I had someone say to me, I'm shutting down all my Amazon businesses because Amazon's not delivering anymore. I said, really? And he said, yeah. And he showed me that notice. I said, no, Amazon's not accepting new deliveries of non-medical items. And then he reread it and said, oh, geez, you're right. I mean, I'm here in the Philippines. I just bought a bunch of kind of silly stuff on Amazon that had it delivered just the other day. So Amazon is still delivering items that are currently in their warehouse. You can still order from them. That whole, consumer part of Amazon is working fine.
So the FBA stuff is I think a temporary glitch. Even if they extend it, I mean, depending on how long they extend it, it could be really bad. But I think it's a temporary glitch. The associates thing is more troubling. So I know this came out like a day or two ago. I'd seen the same screenshots and was skeptical. I was like, look, can someone verify this? Yeah. And then a couple other, I still don't have full verification, but a couple other people chimed in enough to where I think it's more likely than not they did this. So basically, they're shutting down Amazon Associates in India specifically,
India
so
only.
limited to India. But like, I gotta say that I scratch my head a little more over. I don't understand that move, because like, they wanted people to turn off traffic to Amazon. Like,
and I was like,
what do you mean
I'm
turn
trying to
off
figure out
traffic?
like if we
Yeah.
got that sort of notice, I was like, how do you just turn off traffic? Do you go in and just delete like every affiliate link? I thought that was a very
And why would
strange
they
request.
bother? Why would they want that?
Yeah, I
I don't
don't
know.
understand that either, and that's why I question the validity of it. I realized there were multiple screenshots. I would like to see a link from Amazon publicly that I could click on and see that the India program has been temporarily shut down.
Yeah,
We
me
do
too.
not have that yet. I have none of that. I have only people from logging into their account, and they get a little notice at the top, and that's it. Now, that could be that maybe their account got some bad message. It could be something. It's very, very limited at this point. So I would say anyone who has an Amazon Associates account, I wouldn't make any changes. I would continue to do what you're doing, continue to send traffic to Amazon. And, at this point, we have no reason to believe that you will not be paid. You will be paid for traffic and sales that you send to Amazon.
Also,
in any country.
They may have noticed that the associate program in India just, the juice wasn't worth the squeeze. Like, they weren't getting the right kind of traffic or the right kind of buyers out of it. So they're using this as an opportunity to kind of shut down the program there. I don't know. I mean, I don't know what the deal is there, but it doesn't make a lot of sense to me.
Well, it seems
either.
India's always been one of those. It's like, I'm American based. I can be part of like the Italian associates program in the UK, but India is like always the one that's like, it just seems like it's operated different than some of the other platforms, right?
I mean, I don't know. I don't know Indian associates that well enough to really comment.
Yeah, I see. I've never been able to get into it for whatever reason, but I can get into like a bunch of the European ones, so you can make money off European traffic. Okay, so then kind of a little bit back to FBA. What are you guys seeing are you seeing an increase in listings, FBA listings, a decrease in prospective buyers? Are you gonna have to change how you value these now?
So we've seen more listings come in Q1, definitely. The problem though is that we always see more listings in Q1. That's on trend, right? So the same thing last year. So we don't know that it's anything outside of that. We haven't seen an increase that we can decidedly put up to the coronavirus. In fact, if anything, I'd say the last 2 weeks we've seen lower submissions. And so here's our thought on that. Joe and I talked about this, is that we think it's likely we're going to see more listings, more people submitting their business for sale because of what's going on, but we don't feel like they felt the pain yet. So sellers aren't feeling the pain or the fear. So, things are very uncertain. You have the stock market way down and way up, and people are kind of, like not sure what's going on. And so a lot of sellers aren't submitting right now. And so we've seen, we think, a decrease in submissions over the last couple of weeks, and it's due to that. On the buy side, and then longer term, we think it's very likely that we're going to see a lot more submissions pending this continuing. We're going to see a lot more people saying, let me sell my business, I need cash.
Got it. Okay. So but just going back to something you said, like a couple weeks ago, right? You had like 17 or 19 listings, and it was like one of the most listings you've ever had on Monday, right?
Coincidence.
It was coincidence.
Yeah. I mean,
and also you got to remember that like there's a lot of lead time there, right? Like unlike a lot of other brokers, we don't just, someone sends us information and we just put them up and we just assume that everything's correct. A lot of other brokers do that. We put them through a very vigorous vetting process that takes as much as 4 weeks to make sure that all the information is correct. So what you're seeing when you see 19 listings, you're just seeing from maybe as much as 2 months ago the listings that got submitted, right? And so that there's going to be some lag time there.
Also, we've got a vetting staff that's up to speed. We've added new vetting people that are that have passed through training, and they're now working on vetting some of the listings. So I mean, that added to it too. So it's kind of a perfect storm in getting a whole bunch of listings in. We got more submissions in Q1, vetting staff up to speed. and just being able to get them live and pushed out pretty quickly. So we had a couple of weeks where it was super up. I'd say because of the decline over the last couple of weeks, if that continues for another couple of weeks, you'll see a decline in the amount listed maybe 4 weeks from now or 5 weeks from now. But it remains to be seen if that decline or less businesses being submitted will continue. I don't think it'll continue forever. I think that's probably a temporary blip.
Here's one thing we definitely have seen is we've seen a lot of people come back that were upset with their valuation, that thought their valuation was too low 2 months ago or 3 months ago. And we've seen them come back and say, you know what? I like that valuation now. I'd like to go ahead and list. So
there's a bit more of that. Yeah,
so
which tells us that's not a guarantee, but it's a sign that sellers are starting to turn a little bit in their fear. The problem right now, so here's the problem, like overall in the market, taking a step back, is like the sellers just aren't scared enough right now. So you have buyers coming in going, give me those sweet, sweet deals, right? I'm cashed up. I've been cashed up, this whole time. I've been listening to Justin Joe talk about that. I'm ready to buy. Give me the deals. Yeah. And they're like, where are the deals, right? Where are the sellers willing to negotiate? Where are the sellers that are dropping the price of their business? I'm not seeing anything. And so that's part of the problem we're running into right now is we're in that weird in between time. So we've been all over this. So we have our sellers, we have our sales crew calling through the sellers and saying, hey, where are you at? Where are you at? And so they're getting a sense from the sellers on what their fear factor is, where they're at, and they're taking the ones that are more interested in negotiating and highlighting and promoting that. So we're sending emails out, whether targeted specific emails or broadcast emails saying, these guys are ready to move, right? You want to make a deal, you want to put an offer in, these guys are willing to move. And then I think that'll become more and more prevalent over time. On the buy side, we've seen some people going, not really sure what I want to do with my money right now. And so kind of like holding off for some of those deals. And that, I think, honestly, that makes some sense. Like you want to wait until the deals are there. But then on the other hand, we have some businesses that are doing better, that are selling more, that are making more money. And in those situations, like you better not wait because it's going to be priced much higher.
The reason why you have these kind of buyers sitting on the sideline is because, up 1,000 points, down 2,000 points, up 1,000 points. I mean, like something in the market has to generally level off, and the economy has to generally level off before
even a level decline, Joe.
Yeah,
right? Even like a regular decline,
a regular bear market would be
just nothing with huge fluctuations, really, right?
Exactly. So I think buyers are going to sit a little bit on the sidelines. Some buyers, at least individual investors. I just got off the phone with a PE firm that said they learned their lesson from 2008 rather, and said, we're going to get in quickly and try to get some deals now and weather through the storm, because if you wait too long, the good deals are gone. So, a lot of PE firms, but a lot of PE firms sit on money that they have to act on, otherwise have to give the money back to investors. So, that there's some different circumstances there. But anyway, I think it's just too early to tell right now. On a March 27th here in Asia, you got to give it a week to 10 days more before you really see things settle out where we're going to be.
In the short term, though, we are highlighting the sellers that are willing to negotiate, that are willing to move, and we are messaging that. So we think that's really important. The ones that are willing to make deals, and then we're also highlighting the businesses that have improved. So if the business is starting to trend up, let's say through March, I don't know, it's in the prepper space or something.
I was going to say, get an example of that. So like a prepper website or
a prepper website, game, board game affiliate, or they sell board games for home. Like they highlight Netflix shows that are worth watching. Like there's a whole bunch of like content sites that can do well in these times. Anything that talks about being at home can do well. Some businesses like let's say a bass fishing, / lure selling site, right? Although it may be taking a hit temporarily, like that's not likely to do bad long term. Whereas like a business that highlights massive concerts of 30,000 people or more isn't likely to come back in the short term, right? That's going to be one that struggles. So the bass, the fishing rod lure site might be a good buy right now, because if the seller is somewhat fearful, if the seller's like, oh, I can't deal with this, I need to get out, maybe it's taking a temporary hit right now, so they're willing to negotiate. But you see, look, long term, like I don't see any problems with that. It's not a ridiculously priced product that people are not going to be able to afford in 6 months or be able to purchase. I'm buying this one. Whereas you see one like in the concert, let's say travel niche, right? It talks
Travel is
about
probably getting
slammed
right now.
So let's say, for example, like that person is that site and that business is likely to be in trouble for a good bit for a while, right? So let's say they come in, they're willing to sell, and they know they're going to have to sell for a deep discount. As a buyer, you may be like, oh, I know that's not going to be around for a while, but I'm willing to, once they feel the pain, which they're not yet, once they feel that pain, I'm willing to step in and buy it at a deep discount because I know it's going to come back eventually. Or the other thing is, so either you know that it'll come back in the future, you want to buy it now, or you see a good pivot. So say, for example, you got a travel site and it's talking about going to Paris and, going to Louvre or whatever. And then you pivot it into a virtual tour of the Louvre or something. You know that you can do something there. Like that, there may be some value there. But again, only if the seller's feeling the pain and you're able to get the discount.
Yeah. And so have you seen then, or you probably will see maybe some more money on file. So for those of you that don't know, you can hold credit on file with Empire Flippers. And instead of trying to find a listing, you find one that's then having to wire your money, you can simply release your funds or a portion of them via email, right? And that kind of locks you in for the purchase. So I'm sure you're going to start seeing, if you haven't already, some more buyers putting funds on credit to get ready.
No, I've seen less of that. So I've seen less money on credit. I've seen more people pull back cash, right? And that's just due to crash market volatility. People going, oh, I want cash in my hand. And I completely understand that move, right?
Yeah.
We will see more credit on file
doesn't make any difference to us because, it's isolated
one way or the other.
So.
We're going to see it when the buyers realize that enough sellers are starting to feel the pain. They're going to hop in and want to have their cash on file so they can snatch up deals. But that's not right now. I mean, we still have plenty of credit on file from people. I'm just saying, we've seen more pullback there than we've seen additional funds.
So let's talk private equity real quick. Joe mentioned he got off the phone with private equity earlier today or something. Do you see their money getting constrained at all? Or because the private equity, they operate a lot in the high 6-7 figure range, right? They're the big players.
I mean, it's funny to say that, right? It's all relative. So they're looking at it going, yeah, we'll go down to the low 7-figure range. They generally are playing in the 8-9 figure range, right? So for them, it's yeah, I guess I'll do some low 7-figure deals. Typically they stay there. They're not getting in the 6-figure space for the most part. It's low 7-figure show.
Yeah, I would say low 7 figures. You do see some smaller funds going after 6-figure deals, but I mean, it's just the nature of the beast that they have to go after larger deals because it moves the needle a lot more for them. Whereas, I mean, it takes a lot of $75,000 sites to move the needle if you have a $10 million fund, right?
We've seen people we know put together a $1.5 million fund, and they're targeting the $100,000, $200,000 sites. But I don't that's not what you would think of as private equity.
Yeah,
correct. Okay, got it.
Yeah. But in terms of their money being quote unquote locked up, I mean, no, we just know another PE fund that just got a large amount of liquidity advanced to them, and they're looking to make some Q2 acquisitions. So no, I mean. I think in other areas of the economy, there are liquidity problems, i.e. real estate. I've listened to a couple of webinars about that, but for us right now, that doesn't seem to be an issue. Now, there are some countries that have regulatory issues in getting money out, and because of COVID-19, the government is kind of half shut down, and maybe they can't get money out as quickly. But yeah, it's a small portion.
Yeah, money out of China right now is particularly challenging.
That's interesting. Actually, one of the guys that I bought my first site through you guys, he got paid out in Bitcoin. He was with a country that their banking system just wasn't super trustworthy. So he took it in Bitcoin. So anyways, it's a whole nother conversation. But
I think no. I think it's interesting. So like, just to let everyone know, like we do pay out in any form of crypto. Almost all forms of crypto
do
that you want.
Purchases in crypto as well.
People can buy via crypto. Actually, I think it's interesting, particularly people that got those like mad crypto gains. If they want to turn that into like cash flowing assets, maybe they want to buy some real estate for kind of like a longer term hold scenario, but they want something they can sink their teeth into. Buying a website or online business makes some sense because it's a cash flowing asset.
It just made it like really real. Like he had a real life reason of why he wanted to make Bitcoin because he couldn't trust the banking system, and that's when it just became like so real to me of why it's important. Which was just going off your comment saying how it's hard to get money out of China right now. So, anyways, so then FBA businesses, have you guys talked about how they're going to have to be revalued through all this, or is it kind of just factor it in with the average like you normally do, just with those down months?
So, I mean, the truth of the matter is you can have whatever formula you want for valuation, but a business is worth what a buyer is willing to actually pay for it, right? That's the ultimate truth, right? Now, the reason we use kind of valuation formulas is so that everyone's on the same page in terms of what the value is, why it's worth something. So it's when a buyer and a seller are communicating, it's not just I feel like it's worth, and you're offending me by that price. Like they have an actual formula they can use to say, okay, it's worth this. Here's why it's worth this. Oh, I think the multiple should be lower based on these factors. Okay, well now you're not just like personally offending the person who's put blood, sweat, and tears into building this business over the last couple of years.
It's like a sport, and you're setting up the rules. Right. I mean, if you just say, here's a ball and just let's bounce it around a little bit, like does not work out very well in terms of a sport. Right.
Yeah.
But if you get people organized, you say there's going to be, 11 men per side and these are the rules, and like, well, then maybe you can argue back and forth and have a game. But so that we found that out very quickly when we first started, is that presenting people with a formula, which is how we got to the price, now makes it more of a negotiation, where people say, okay, I don't agree with this part of the formula or this part of the calculation, and here's why. Well, now we're talking, and rather than just throwing out numbers.
Got it. So in terms of having the formula like still be a determinant of what the valuation starts at, that makes sense. There's going to be more negotiations. There's going to be more creative deal making. As things are just kind of all over the place, right? So, a business that's taken a huge hit, let's say in the travel niche, isn't worth what it is today based on the previous 12 months. And so you're going to have to discount that pretty heavily. You're going to want to figure out what that new normal is and bake that in. You can't bake it in completely though, because unless you assume the travel industry is going away forever, which isn't likely either, right?
Got it.
So where does that fall? That comes to clever and creative deal making, which our team is particularly good at.
And we'll test, selling some more distressed assets, which we're going to be testing here soon.
Yeah.
But we might have to make some modifications for that particular type of thing. When I say distressed asset, I mean something that's really on the decline, but has some intrinsic worth. Maybe they lost their Chinese supplier for whatever reason. But there are other suppliers in Mexico or India that could make up for it, but they just haven't been able to switch over yet. They still want to be able to sell for X, Y, Z reasons. Zach,
think about this, man. So in general, like decline by more than 50% is something that we would automatically decline. We would not list. It would get locked up in vetting. And my thought is that in these kind of times, you're going to have, bargain hunter buyers. You're going to have people looking for deals. And like, we want to test through slowly. We don't want to let everyone join, but like, we want to have some businesses that have taken big hits, right? To be able to list their business and show, because if someone's willing to buy that and they're interested in buying it, why are we blocking that transaction? Now, if we want to block them at a certain size, like smaller deals, doesn't make a lot of sense to us. We'll definitely do that. But on let's say a $300,000 deal that used to be an $800,000 deal, why wouldn't we let buyers have an opportunity? Now, we don't know. Our guess is buyers are interested in that and that bargain hunters will be shopping for that.
Oh, absolutely.
But we don't know the truth until we list it and see what happens. And so that's what we're looking to test out.
Well, that's really interesting. Because, and it's not like the business was crap. It just lost like its supplier, like Joe said, or one of
Yeah.
these things. It was a great business.
Yeah,
It wasn't
exactly.
a piece of crap so that makes a lot of sense.
But
Hey,
it
Yeah,
would have,
especially if it
it
has
would
a
have been
solid brand,
denied.
you know.
Yeah, but it would have been
especially if it has a
denied
solid
otherwise,
brand.
Joe.
Yeah, exactly. And maybe we need to loosen that up. We need to change some of those parameters. I don't think we're going to do it on small sites, but those kind of mid-range value sites that we could still see getting a good deal for the seller, making sure that they exit with some cash in their pocket while not giving the buyer a lemon. We don't sell lemons. There's an opportunity there to do that in the coming weeks for sure.
Joe, quick question for you. Amelia asked, I have to wonder if the folks who are okay with risk are keeping a closer eye on the stock market right now as the primary opportunity to capitalize. So, kind of along those lines, are people looking at the stock market, do you think, and using it as a negotiation tool? Right. I mean, there's some sense in that. I don't know that I don't know they're doing that right now, but using that as a point of leverage or a point of negotiation, I don't see why you wouldn't. You're going to use everything in your tool belt you have.
We definitely have individuals that loan against their stock portfolio. For instance, if you use Wealthfront gives you an automatic loan for, I think it's 3.5 or 3.75%, depending on how big your stock portfolio is. So if your stock portfolio is $500,000, they'll give you something like $300,000 at 3.25%, which is nice, right? So if you wanted to buy an online business, you put your stock portfolio there and boom, you can get a loan and you can use that loan to buy an online business. Now, if people are seeing their stock portfolio going down, they're going to be less likely to take a big loan from that because they're going to be worried they're going to get some sort of margin call or something like that and have to pay back or liquidate to pay back the loan, because that's how Wealthfront is using those assets. And that might have some limitation on what individual buyers, at least not portfolio buyers, but individual buyers can offer. They might not be as cashed up as they were previously. I don't know if that answers your question, Amelia, but a little
Joe, on
sidetrack.
that point, it seems like the portfolio buyers, the private equity groups, they're, at least for now, weathering this better, right? So they're coming in going, look, we've got cash reserves, or we can pull more cash from the investors. We're definitely looking for value. We're definitely looking for quality businesses on even a slight discount. But so you're seeing that they're just more disciplined in their kind of approach. Whereas the individuals or partners looking to buy like a $400,000 or $500,000 site are like, I don't want to touch my stock portfolio right now, or I don't really have, like, there's a disconnect between those two.
Yeah, well, I think that the private equity firms have probably stored up some dry powder, some cash, and now are looking to deploy that because they know they can get, I hate to use the D word, but discounts. And
Joe. So basically, he was saying they're looking for discounts. I think they're looking for value, not just discounts. They're looking for any kind of crappy business that's selling for less. They're looking for quality businesses where they can get a slight discount. And I think that's the smart move. I just think that my guess is that they're just more disciplined across the board and can make moves in times like these where others are just less likely to make those moves than the private equity groups.
Yeah, definitely. We got you back, Joe?
Yep, I think I'm still here, right?
Yep, we got you.
That was weird. I don't know what happened there. Okay. Yeah, but Justin, I heard the whole conversation. So yeah, Justin answered that fine, and I think that's exactly what we're looking at here. Again, though, I think I was on another call for a private investment that I have in a fund that does mortgage notes and sort of hard money loans in California. They were talking to their investors, so it's very real estate attached, and they're the biggest thing that they wanted to say is, look, there has to be patience right now because the market is so crazy and the virus is so crazy. You don't want to make any crazy decisions in this sort of environment, but
yeah,
we'll see how this shakes out in the next 10 days.
Well, that was actually something I wanted to bring up. So do you guys do like stock market, real estate stuff too?
We do personally, but not professionally.
Yeah. Yeah, personally, and so do I. So I've seen this before, and I just got it emailed to me a couple of days ago. So the S&P 500 has been on a bear market for the past 11 years or so, and during that time, it averaged over 16% returns per year.
Bull, you mean not bear market?
Yeah, you said bear,
I'm sorry,
but you mean bull.
I'm sorry,
Yeah.
bull market. Yeah, bull market for the last 11 years, averaging just over 16% per year if you look at it like that. I've read that if you missed the top 20 trading days over those 11 years, not 20 days per year, but 20 days in the 11-year time frame, your returns would be cut in half into like 8.2%.
Yep.
Yeah.
So
I mean, the stock market was up what 12% or 11.5% the other day. I mean,
yeah,
if you were able to quote unquote time the market and get your money in right on that date, you would get a nice boost. But no one, but not even
the average
professional
person
traders can
isn't
do
doing
that.
that.
Yeah, and
I
not
think
even professional traders do it well.
correct. So the whole point, I'm bringing it up. The point is,
Yeah.
Don't be rash, kind of like what you were just saying.
Right.
Kind of stick it out for the long term, because statistically, historically speaking, it will come back, right?
Yeah, most likely until it doesn't. Yes,
right.
Yes,
That's why I said historically, statistically speaking.
Yeah. I mean, yeah. So I was thinking about this is that the problem with the stock market is like, let's say that you think that the virus is likely to get way worse. There's a whole bunch of bad stuff coming. It doesn't mean that the stock market's going to correlate to that, because you don't know if the stock market has already baked in those bad things that are planned. It could be a little less bad and the stock market jumps, right? Because it's already baked in those planned things. And you just don't know where that's at. So you don't know what's going to go on there. So like, it's ridiculously tough. What is it like? Time in beats timing.
I think so, because I mean that goes back to the whole point. Yeah, time in the market rather than timing, if we're looking at the history of it, has always been better. Do you guys ever?
To be fair, we're not experts in this. I mean, we are relatively newbies, maybe intermediates, and this is just on the personal side. So, like speaking professionally about stock investments, I feel comfortable talking about online businesses, stock portfolios, not so much.
It was more just the interesting trying the timing of it all.
Yeah, for sure. John Paul Hendricks asked a question. He said, given interest rates will stay low for some time, so too will yields on various investments. This makes online business and revenue generating sites an attractive alternative. Do pro investors see the same? I think possibly, though. Keep this in mind, that if you think that the economy, and it's not unreasonable, the economy is going to come back and just come back strong in some point in the near future, like that means you're going to need to see massive gains in the stock market. So we're going to compete to some degree, right, with them. And if those come back, then you're going to see massive gains there too. I agree with you that in general, the returns on online businesses are much better than the stock market traditionally, right? And definitely over the last few years. If it comes roaring back though from a steep decline, I don't know, at least in the short term, it might be interesting. I'm not sure that some people will beat it out, but like, it'll be tough if you're getting, averaging, 20-25% gains over like a year from now.
Yeah. I mean, back to the question though, do pro investors, I don't know what you mean by pro investors, pro online business
private equity
investors?
guys, people that are with portfolios, people that do this professionally.
Well, they've always seen online businesses as a better investment than the stock market because they feel like they can better control their investments. So because they have direct control of the business, they can cash flow the business, they can cut expenses and get more cash flow, they can reinvest into it. So, they get that, Joe. Example. But if you're saying
$400,000 site buyer to get that.
Yeah, and then it becomes an issue of, we have to make sure that you, as the $400,000 site owner, understand how to run that online business. And I think we do a good job of that here at Empire Flippers. Is our sales team is really going to put you in touch with the seller so that you know what the seller is doing every day, every week, every month. And if you don't feel comfortable with doing that, then we're going to have to look at a different listing. Or if you don't feel comfortable hiring someone to do that, that sort of thing. Whereas, obviously stocks are going to be a lot more passive.
Emmanuel asked, do you see a trend of large private equity funds rolling up consolidating small businesses in the same verticals? Absolutely, we see that.
Yeah,
So there's
a
a
lot.
huge interest in doing that. They want to do to the low 7 and even high 6-figure businesses what's being done in the 8-figure businesses in terms of roll-ups. So you absolutely see that. Some of the problems are like you have to make sure that the business can kind of stand on its own 2 feet. That there's enough bang for your buck in the businesses you're rolling up. But that's been a massive kind of approach for lots of people in that space. It really sucks because I thought in 2020 we were going to see some interesting results out of the people that have been doing that the last year and a half. And I just think with everything going on right now that we're going to have to kick the can on that, on seeing those results. Like we were really excited to see like what are the winners and losers there? Like which kind of approach were the $100 to $500,000 affiliate site roll-ups doing better, or were the $500,000 to $3 million FBA pickups in or around a main site, or is that the one that does better? We were really excited to see this, and I just think that the data is to be skewed on that. But yes, in terms of an approach, yeah, that's absolutely happening. People are all over that.
Yeah, still happening, and still a lot of plans. But yeah, maybe they can't exit as quickly right now because the idea would be for a private equity firm to roll these things up and then sell it at a higher multiple to a VC firm. Right. And VC firms have kind of said, well, we're going to see what happens right now. We may not be throwing as much money around right now, especially at these higher multiples. So I think that PE firms will continue to acquire and look for good deals and follow their process. They may just have to keep their exit horizons a little bit further out.
Here's another one we got. If you guys had 50,000 ready to go, but we're new to online businesses, what would you do in the current environment, niche monetization, wait 10 days, see, etc.?
I like that question. So in around 50,000, let's say 50,000 to 200,000, I think this applies. I would look for sellers that are more fearful than I think they need to be. Right, that's what I'd look for. So, and particularly valuable sites that have all the other requirements in place. Something I can run, something I'm happy to take over, something with like a bit more of a brand than just a kind of like a Me Too type site or whatever business. So it has some value, but like where the seller is more fearful. So where maybe they've taken like the example I mentioned before was like a fishing rod and reel type site where they've taken a pretty big hit just because people aren't buying fishing gear right now. But that I know over the even the short to midterm, I don't think that's going to do badly. Where the sellers kind of freaked out though, I would jump on those. Those are the types of sites I would go after. I think
if the one thing I would say though is if you say 50K ready to go, I just want to make sure this is not your life savings because these investments are inherently risky. And, we always say that at Empire Flippers that, please don't take your kid's college fund and use it on this. This is not what it's meant for.
If this is cash reserves, I would not blow your last bit of powder or anything right now. I'd make sure you have enough put away to where like you can withstand a storm. That's true.
And I like that 50,000 range because that's what I got in at. I got in at 49,000. One reason why I like it, and you guys correct me if I'm wrong, but I was able to turn around and sell it easily for like that 80,000 range. There was a lot of buyers like ready to buy it at the next price point. So that was one benefit that I saw being at that price point.
Yeah, there's a mention of like cheap money still sloshing around. Yeah, I mean there's low interest rate loans you can pick up all day, and I don't know how long this will last, but getting some loan. I mean that's something we're looking to do at Empire Flippers right now, just for ourselves, just for the company. Like why not pick up some loans when it's damn near free money? It makes sense.
Yeah. Riaz asked, I wonder if the SBA loans will be impacted and cause getting financing much harder for sites. Well, I mean, the $2 trillion package that was passed, I think something like $2 billion was set aside for SBA. Now, I think they want to use a lot of that for existing businesses and to try to make sure that existing businesses get bridge loans to get through these rough economic times. But I imagine some of it will also go to the normal sort of SBA use of acquiring new businesses. And we've seen although it's not great, we have seen some of these newer type banks where they're focused on getting SBA loans for digital products. It's still not easy by any means, but it's getting better. Hopefully, an injection of cash like this by the government will make banks see it more. Because I will remind you one thing with SBA: even if everything is approved by SBA, you still have to have a bank that actually underwrites the loan and does the approval, and the money comes from them. It's just the government is providing the backing for the loan.
There's a lot of deals that get done that are non-SBA. Let's put that out there. Also, a lot of deals get hung up on SBA or get snatched out from other people trying to get SBA. So we've definitely had this where, and early on, I think what we did was we would lock up businesses that were looking to get an SBA loan. And so the business would be held to the side, not available. And then this buyer would be trying to get an SBA loan, trying to get the business approved. We'd be going through this whole thing and not seeing other buyers potentially for the business. And we tried it, and that was a loser, quite frankly. So the problem is that the seller doesn't have any other interested parties coming in. And it's taking a month or 2 months or 3 months to try for the buyer to get it approved, for the business to get approved. And maybe that doesn't happen. And then you lose momentum, and we need to get you back up and get you listed again. So, and then, when we don't do that, someone applying for SBA loan ends up getting the business snatched out from under them in the middle of their kind of application process or approval process. So it's good luck with that. Good luck.
Yeah.
So cash is king.
Cash is king.
Cash is king. And I would say if you're going to use the SBA process, it better be for a business that's pre-approved. And it better be an American business, obviously, with American tax returns that match the P&L, and you better have a decent credit score. You better be willing to sign a personal guarantee, and you better be willing to wait through the possible 3-month process of going that way.
That's a long time. So you said an interesting point. It's got to have U.S. tax returns. How many of these business or online content sites do people actually have good, thorough tax returns and things like that? Is that pretty hard to come by?
The problem is they're mixed in usually with other business expenses or other assets.
Got it.
So someone will have a broad LLC that they'll have multiple websites, maybe another offline business, maybe their stock investments, all kinds of crazy things in that LLC. So in that case, their tax return is going to reflect completely different numbers than what the P&L for this one particular asset represents. And it doesn't qualify for SBA in that case, or it qualifies, but at a much, much reduced rate. So that's why we find that, a lot of times in those case situations, SBA is just not a good fit.
Zach, F. Blake asks, what's the average sale multiple historically, and where do you see that going? I don't remember exactly what it is, but we come up with an annual report every year where we share exactly kind of what the average is, and then we go even further and we break it down by monetization type. So what's the average multiple for an FBA versus an affiliate versus a SaaS business? And if you want to see that, we'll share a link in the comments or at some point, but look up 2020 industry report Empire Flippers. Just Google that. And you'll be able to find the report. It's like a 100-page report on all of the details. We share all of our numbers.
No, that report is awesome. I think I remember off the top of my head, content sites, I think saw a 2, the multiples went up by 2 in 2019 or something like that.
Yeah, they did. And I encourage you guys to look at for those who don't want to read the 4,000 word report, which is great and fantastic. I really think you should dive into it. There is a cheat sheet, which we can also send a link to. And I highly advise looking at that. And that will give you good numbers showing that content sites went up by a multiple of 2.
Where's your cheat sheet right now, Joe? Why don't you have it out? You're going to bust it out, buddy.
Yeah, actually, I wanted to upload it here, but I don't know how to do that.
I don't know. We got some technical challenges.
I just put my email in, so people can email me. It's in the comments, or we'll put some links in the description when we're done, so people can circle back and see things. Another comment? Do you see more sellers willing to seller finance / earn out with the current situation?
Well, we're having those conversations. I can
I
tell you.
bet,
So
yeah.
when I mentioned our salespeople are going, calling up sellers and saying, "Hey, where are you at?" They're taking their temperature. Right? That's such a weird thing to
Yeah.
say right now, but they're taking their temperature on selling their business, and getting a sense and kind of nudging them, saying, in particular instances where maybe they should be a little more worried, saying, "Look, let's talk about seller financing. Let's talk about what that might do for you." Trying to see if they'll budge. So our guys are explaining to them, like, here are some of the benefits. You might be more likely to sell. You might be more likely to get an offer that you're comfortable with. But here's the risks that come with that too. So we're having those conversations as we regularly do. But because of what's going on, we have our salespeople specifically going back and calling all of our current active sellers and discussing it.
And so say it's a content site and if a seller to seller financing, you guys hold the domain right until all the terms are met. Is that how you do it?
Yeah, so we'll hold some leverage. And keep in mind that there's no way, even in today's market, that this is happening on deals under $100,000. Like, there's still too much cash available. Like, the competition's just too fierce that you come in and say, look, I'll put 50% up front and 50% finance over the next 12 months. And by the minute you finish your sentence, there's gonna be someone else, cashed up ready to buy.
And the other thing I want to say about seller financing is I realize there are a number of books out there that recommend, buying for only 10% down and, going and looking at your local window washing company and offering 10% and all that kind of stuff.
Well, just call it out, Joe. Just call it out. What is it?
It's the Harvard Business Review book of buying and selling small businesses.
There it is, buddy.
And it has a lot of people read this book and then they approach us. They come to Empire Flippers and they say, "Hey, I want to make an offer on this business, and my offer of this $1 million business is $100,000, and the seller has to provide $900,000 worth of financing." We tell that person, "Thanks, but no thanks. We're not even going to take that offer to the seller because it's bullshit. And it's not going to work in our environment."
That's interesting. I didn't know that was kind of a common thing.
Oh, it's a model. It's a pattern.
Wow.
It's a model they follow, and they come in with these like lowball offers. Like, look, they won't tell you, but we all know exactly where they're coming from. We know exactly their pattern, and we're like, oh, that's so cute. I know what you're trying to do. And so basically, like, I'm teasing them, but like, it's basically just a re-education camp that we put them through.
Yes. Yeah,
it's an educational process of like explaining to them, how it works in the real world.
Typically, if we do seller financing, the seller financing piece is 30%, maybe 40%, but typically, the deals are a combination of cash or some sort of debt that the buyer finds himself, whether that's private investors or a bank or his own personal assets. A lot of times that's a little opaque to us, and then maybe some sort of earnout, whether that earnout be traditionally based, performance based, or financed based in terms of getting a piece. It's an equal breakdown there, but the idea that you can come in on a $700,000 deal and offer 70 grand, like, we're just going to tell you, that's not the way it works here. And there's just to re-educate you, but
sign me up for that.
Yeah, for sure. There's a question from Amelia. She says, I wonder if people dumping software tools in order to reduce expenses and be conservative to whether the storm will push some SaaS businesses to sell. Possibly. I've thought about this a bit because, we've looked at that too. We've looked at we're talking essential versus non-essential software, right? And the really good companies, the ones that get those ridiculous valuations that are publicly traded at ridiculous valuations, I don't think they're going anywhere. I mean, we're not dumping Zendesk. We're not dumping HubSpot. Businesses that are software that's essential to us continuing to run, that's so ingrained in our process that like getting rid of it it's not a luxury piece of software. And they're not going anywhere. And that's why those businesses are just worth so much. I mean, even the cost of like getting away from them is high, right? And that's their whole goal. That's what they're doing. They don't want you to easily go to their competitors, right? But some of the ones that are superfluous or that are kind of extra, I think, maybe there's some opportunity there. The software companies that haven't become an ingrained piece, of your arsenal that are kind of extra, I think they might find themselves in a bit more trouble.
Yeah,
I don't want to name them because I don't want to call them out, but I'm thinking of some software companies that we've used that we're kind of like, maybe we don't need that right now.
Right, and don't forget that some SaaS businesses, are positive cash flow, and so yeah, sure, if they see a reduction in their recurring, push to sell might be a little too aggressive because they'll say, okay, well, we're just making less money than we were before, but we're still going to just wait it out. But we'll see. We'll see what the impact is of that. I think it's too early to tell. We have to be patient and see.
I just find the whole SaaS model really intriguing, and that's something I want to get into. Aside from the content sites, getting a SaaS business that doesn't really have an affiliate team behind it or even affiliate offering, be able to roll that out. I just see some low-hanging fruit with some SaaS businesses. So it's something that I definitely want to explore in the near future.
Yeah, so that's something we've really started to go after. I mean, obviously with everything going on, but like that was a goal in 2020 is to focus a lot more heavily with SaaS businesses. And so we've seen some interest in the space. We're putting some content out in that industry. And so I would expect more SaaS businesses for sale, maybe not in the very short term, but definitely in the medium to long term at Empire Flippers, because we're making a push there.
Oh, that's awesome.
Yeah, SaaS is an interesting animal because, sometimes we see SaaS businesses come along and they're built by programmers who are not marketers. And unfortunately, they don't cash flow as well. And it's not to say that they don't have value, but in our particular marketplace that values SDE or seller's discretionary earnings, cash flow essentially very much, their SaaS business may not have that exact value that something else may have, and so we have to take a look at that and see a better way to kind of price that out.
That's by the way, Joe, you just mentioned something where there is value, but there's no value in our model. So in the Empire Flippers model, a business that's not really making money, but that is really cool and unique and has customers maybe that aren't paying or whatever, but like is real interesting tech behind it. That's just not something we're going to take on. We're not going to take it. We're not going to list it. We're not going to sell for you. But it doesn't mean that it's not valuable. It doesn't mean that there's not a buyer out there to buy it. It's just that we don't have the capacity to like have the people go through and sort this one from that one if it's not making money. I mean, if it's making money and people are paying for it, like the value is just super clear, and that's how we roll. But there's some interest there. So I mean, I know that there's sites like Side Projectors or whatever that are kind of built to sell your side projects, even non-earning side projects. I think there's something there if you're willing to kind of dig through the weeds to find something interesting. I think there's some value there. It's lower. Yeah. It's not lower hanging fruit for us.
It's a bit speculative too. So and I think in this current market, bit speculative might be very hard to come by. The PE firm that I got off the phone with this morning, specifically said, "Hey, can we send you deals over at Empire Flippers?" I said, "Sure, send us deals." And they're like, "Yeah, we have a lot of unprofitable SaaS deals to send your way." And I'm like, "Don't send us those deals." So, there's a lot of guys out there that go ahead and build the software from the beginning with the idea of raising money, and they'll figure out the profitability later. I think in the current market, those types of businesses may have problems.
Yeah. Well, one of the appeals that I see is like you said, having a programmer. Finding one that a programmer did as a passion project. They put all the programming time into it, but weren't really a marketer. And finding one of those, man, that could be a real quick win, possibly. So maybe the gears are always turning, of course.
Right. Just be careful with the development side. Make sure you have some sort of development shop to back up what that guy did.
Well, I think that deters a lot of people from getting into SaaS is the dauntingness of the development of it. Having to, if the seller's the programmer, they're not coming with the business, right? It's one thing if the programmer is an employee and is retained, but
right. But the good thing is, to counter that point, I think outsourcing is just going to get cheaper in the current climate. So, those Eastern European guys that were great programmers before and were X amount of dollars are going to be just X minus Y right now. So, that you're probably going to be able to get an outsourced development team fairly cheap.
I've been super successful getting outsourced developers from Eastern Europe, like you said. Yeah. The quality seems really, really high coming out of there.
Mm-hmm. I have a guy I know, a friend through the Dynamite Circle, which is a community we're part of. He set up a site to help you hire programmers out of Eastern Europe. You know, is that still around? You plug that, Joe? I don't remember the name.
Don't know the name.
It's like Blogger Pro or something like that for programmers.
I don't know. No, yeah, I forget.
Okay, well, let's. Do you guys want to cover anything more on that, or do you want to?
No, I just like Joe popping his AC over there. You're cooling it off there. Or just popping the AC.
It's a little too cold, so I was just trying to warm up.
That's a funny thing to say. It's too cold in Manila. By the way, we didn't say where we're at. So you're in Manila. Yeah. I'm in Vietnam. We're not going anywhere right now, so we're kind of locked down. And Zach, you're in San Diego, right? I think.
I'm in San Diego. We don't have air conditioning. I've never had air conditioning in any of the houses that I've lived in. We need it
good for you, sir. Yeah. San Diego, dude, it's so nice there. Yeah. It's ridiculously nice. Come out to the Philippines and tell me you don't need AC.
95 degrees and 95 humidity. So like
it's just a sweat box if
you walk outside and you're just drenched.
The only good thing now is that because there's absolutely nobody on the roads, it's beautiful blue skies, no pollution whatsoever. Unbelievable here in Manila. Like it looks like
Manila
California
Bay,
blue
Joe.
skies.
Manila Bay, dude. It looked like Boracay. It was this like beautiful teal color. Like
all
that
you
thing
need
is normally
2 weeks of nothing.
Yeah, dude.
So, okay, speaking on this, so kind of to wrap it all up, let's talk about maybe some positives that might come out of all this. One being, at least from what I'm seeing in Southern California, is the traffic. And we always talk about traffic here, but it's like horrendous. You plan your schedule. So do you guys. Like Manila, you said the traffic's terrible. I wonder how many people are going to realize, hey, I don't have to go in the office every day, and I'm just as or maybe even more productive working from home. I wonder how many businesses are going to be like, we can save a lot of money by letting our people work from home and see that they're more productive. So,
oh my God, yeah. I mean, like you see mainstreamers talking about remote work now, which is really interesting to see. We've got a bunch of friends in the space, and we've sponsored and been a part of the Running Remote conference, which is running at Bali. I could be run right now, but which they try to show, they highlight distributed teams and remote workers, and it's kind of like the event for that industry. We have friends that run a site called dynamitejobs.co, which has a bunch of jobs like the jobs working for our company and our friends' companies and interesting kind of like distributed team businesses list their jobs there. And I was telling one of them the other day that, dude, this is your time to shine, baby. This is your Renaissance era. Like you should be out there talking about this. You should be doing interviews. I mean, like it is your time to just blow that thing up, because like you're not going to get more attention than you get on this right now while everyone's going through this. So I think it's a hot market. Any of the like remote working stuff is super hot. I think a lot of big companies are being forced, obviously, to go remote. And, I think they're going to find, wow, maybe it's not so bad. And maybe we can do this well. There was just the WordPress guy, Mullenweg, was just on Sam Harris's podcast talking about remote work. And I'm a big Sam Harris fan. I love his podcast, Waking Up. But he just had him on talking about remote work, and I was like, well, that's weird. That's an odd topic for him to have on the show, but it's interesting, super interesting.
Yeah, I mean, I think when Justin and I set up Empire Flippers in the beginning, we set it up to be a remote company right from the beginning. I mean, we didn't want to have an office, and I'm going to say not because we saw what was coming in the future, because we just didn't want to go into an office.
Well, we were forced out of our office, just to be clear. We had an office in the Philippines, and our business was
we did, but that was our outsourcing company that wasn't really Empire Flippers. So, but we wanted to make sure that Empire Flippers was never bound to an office from the beginning, and wanted to make sure that happened. Now, we've rented Regis offices now and again to kind of do some training here or there, especially in sales. Yeah, we work, unfortunately. Especially salespeople. It's hard to train salespeople remotely, so training moves quicker in person. So now and again, we've modified that a little bit.
Dabble. We dabble
Yeah,
with
I
office.
definitely think overall there is no plan for us to get an office. Don't want an office, and I'm glad we don't, because the competition who is struggling to convert, we could pick up their deals in the meantime. So
I think there's always going to be a place for face-to-face conversations and meetings, in certain capacities. But I have so many friends like posting on Instagram. They're like kind of sitting out by the pool doing their work. They're like, "Why can't I do this every day?" And I'm thinking, yeah, why can't you do this every day?
Man, if
Or
you're in food, I mean, there are certain jobs that just obviously can't be ever
right.
done that way, and I completely
correct.
understand that. But I think a lot of people, and more so, a lot of companies think, "Oh, we could never do that. Oh, that would never work for our industry or our business," and that's bullshit in a lot
Yeah.
of cases. They think that, and it's just not true. And now that they're being forced into it, I think some of them are going to come around and go, "You know what? We could save some money. We
I mean,
could
especially
improve
in
our."
these, especially in places like California, where a lot of people have large houses and they have an empty room that could be an office.
Yes.
Like, that to me is the amazing part. Like here in a place like the Philippines, where people are poor and don't have large houses at all, working from home, our staff does do it here, but it can be a challenge to find a quiet, dedicated place to do your work. And I think it's funny that if the third world can do it, certainly the first world can do it even better.
Yeah. So yeah, I was just trying to kind of find some positives out of this because I try to be a positive guy and stay upbeat and things. So that was one of them.
Yeah.
People hopefully spend more time with their kids and things. Is there anything else that you guys see that could possibly come of this? That
No,
I think
Zach, that's the only thing. It's really the only thing. Not just kidding.
No, I think it could be, and obviously we would benefit a lot from this, but the buying and selling of online businesses could become more mainstream, because as people sit there at home and start working from home and have some downtime, and instead of having to pretend to work for the boss who's not looking over their shoulder, they
Yeah.
start looking at other ways to make money.
Yep.
And sure, they look at freelancing and they're like, I don't want to have to trade time for money. And then they say, well, I have some extra cash built up. I don't want to put it in the market right now because things are in fluctuation. Could I buy a small online business? And I think there's going to be a lot more people that look that way.
Yeah, Joe, a mid-level manager or senior manager that's at this company that just goes through a round of layoffs, goes through the grueling process of, I mean, it sucks to be laid off, obviously, but like even laying people off sucks. Like having to go through that process and lay off a crew sucks. So they just get through this like process of like laying off 50 workers on their crew or whatever, and they go, you know what? I don't want to do this. I don't want to be a part of a team that's like based on economic changes that are way outside of my control. Like I'm forced to have these shitty conversations with people I care about and respect and that work for me, and then also wait for the next moment to come where they're kicking my ass out of the company. Like, why am I doing this? Like, why don't I go work for myself and like set up my own business? And like they start looking around and they realize, oh, I can buy a business that's already working and running and making money. That's of interest to me.
Definitely. No, and that's why I'm excited about being able to now merge with you guys a little bit. Is I think there's going to be a lot of new people coming in that are just beginning to dabble with it, and I'm going to be able to share my story and help how I can. So I'm really excited for the future.
My aircon remote's not working here.
Yeah,
So.
it's a struggle. Struggle's real, Joe.
First world problems.
Yes. First world problems for sure. And I think that's one of the other things to come out of this is we're going to be all right. Like if you have water, electricity, internet, a comfortable environment. Hopefully all of you are not alone. I have someone here with me. Justin has his wife. I mean, really, you've got it better than a good portion of the world out there. And I think you kind of need to put things in perspective a little bit and say, yeah, maybe it sucks that I can't go out to the mall and spend my money, or, I can't go out to a restaurant, have a nice meal and have drinks. And I understand that. And I'm getting cabin fever as well, but put it in perspective.
Let me rephrase what you said, Joe. because I think there's going to be a lot of people out there this is really suck for, and people in the Philippines, for example, and it's not going to be amazing for them, and they're going to go through really shitty times. Who you're talking to are the millennials, the husbands or wives sitting at home like bored because there's nothing to watch on Netflix on their 60-inch flat screen TV.
Yes.
Those are the people you're talking to, right?
Yes.
You're not talking to the people that really are going to struggle, that are going to lose family members, that are going to get sick themselves, they're going to be in overcrowded hospitals. Like it does suck for them, and it is going to be bad. But like it's these other people that are sitting in their privileged airy lofts that like complaining and doing like celebrity like fucking TikToks or whatever, like about how it's gonna be better for everyone else. That those, it's easier for you to say. That's what you're saying, right?
Yes, I think you got to put it all in perspective and see where you're at, and if you're able to work remotely, you should take advantage of that. And I think figure out that you are in a fortunate situation and be happy for that. John Oliver did a good thing 2 weeks ago where he's like, you get 30 seconds to complain and then no more complaining at all.
That's funny.
It was really funny. And I think, it's relevant to this type of talk, because you talk about the good things that are coming out of this. A lot of people listening to this video, I think, either have an online business or can work from home and have that advantage. So please find yourself to be fortunate in this situation.
Definitely. And if I can help with anything, send me a message. Happy to always share my 2 cents about whatever I can. So I love hearing people that are able to transition and start living their dream, whether that's working from home or traveling or whatever it might be.
Thanks, Zach. Thanks for doing this, man. Thanks for putting this on. I really appreciate it. I mean, Joe and I want to do, so we're going to start doing more live events. I mean, we're talking about maybe once a week, like evening our time, or maybe even morning sometimes, so it's evening US. Like we'll just grab a glass of scotch and just like start talking business and what kind of happened for the week. Yeah, buddy. That'd be fun.
One glass.
Yeah, you're limiting it to one.
Like a full glass, though. I'm not messing around with something.
I will leave the bottle will be in the kitchen and one glass only here.
No bottles, dude. Come on, what are we doing here? Nonsense are you talking about? Yeah.
Thank you guys very much for your time and your insight, and I look forward to doing this more and delivering some more value to people. So thank you.
Thanks, Zach.
Cool. Yeah, thanks, Zach.
All right. Well, everybody stay healthy, and we'll talk all soon.
All right.
Bye.
Bye for now.